Everyone, this is Rob Roy, and welcome to the Elliott Wave Options S&P 500 U.S. market update. Well, the big news of the weekend obviously has been the passing of Ruth Bader Ginsburg, who, without a doubt, was a very influential member of the High Court throughout her career. Unless you've not been around a financial network over the weekend, you've probably seen all of the media outlets talking about how in an election year, when there is a vacancy on the Supreme Court, the election tends to move towards the Republican side. That's just how the numbers are, including the last election with President Trump. But how might that affect the current market with where we are in our charts? Let's take a look. As we get ready to look at the charts, don't forget to give us a like. You know how this works. It helps the channel, and that allows others to have the opportunity to view this kind of educational material. And speaking of educational material, we usually reserve this type of thing for our subscribers on our website. However, we just completed an education package on an Elliott Wave pattern called a diagonal. And the current market is exactly in one of these diagonal patterns. So I thought I'd go ahead and share this with you. As with everything Elliott, there's a number of rules and guidelines around a diagonal pattern, starting with the fact that we have these converging lines in a bit of a pennant type pattern, as you can see, wider the mouth at the beginning of the diagonal pattern, then narrowing towards the end. There are similarities and differences in diagonal patterns with the traditional 5-wave impulse patterns. For one thing, diagonals are also 5-wave patterns. However, one of the differences is diagonal patterns have no monowaves. Every single wave within the 5 waves in a diagonal pattern has to be a complex wave. So when you see something similar to this, you might think, well, that doesn't look exactly like an impulse pattern, but it's kind of similar. Well, maybe you were looking at a diagonal pattern all along. Now, an ending diagonal pattern ends where the wave 5 gives a bit of a blow-off top type of a formation. So we reach that upper trend line and then boom, exactly what just happened in the market. That old FOMO that you hear of, everybody talking about fear of missing out, where people say, oh, the market's going up, I got to get in, and you get, boom, that surge to the upside. So when you get that blow-off top type formation, that normally signals the end of the diagonal pattern. And the end of the diagonal pattern means we correct back to the downside. Now, we talked about this in our Tuesday night trade finder, where the market had moved to the upside here and was struggling right around the 38.2% Fibonacci corrective level. Look at that. Look at all that time where we were moving back and forth through there. We kind of moved a little bit up ahead of the Fed meeting, and then the Fed didn't seem to really appease the market too much. They were pretty specific on they're not going to raise rates for 4 years, but they said they were going to continue their asset purchases, use all their tools, but they weren't specific on that. Perhaps the market was looking for a little more specificity, if you will, on what exactly those asset purchases were going to be, and the market reversed its initial move, which happens all the time. You get a knee-jerk move on a Fed announcement, and then it reverses, and now we're down, you can see right on the low on Friday, right at the 50% corrective level. So where do we go from here? Well, obviously we have two different patterns set up with this corrective move. We could continue with the downward move following that completion of the diagonal pattern, and we have a zigzag set up right here, which could show a move down towards the 315 level, which seems to make a lot of sense, doesn't it? Because it also is right around where the recent wave 3 was. We had sideways here for quite a while. Could certainly see a continued move to the downside there, reaching that pattern. But if the market wants to hold here at this 50% corrective level, we could also, from this point in time, see a continued move or an extension to that wave 5, if you will, with this zigzag pattern here with that 50% corrective level dead on the nose, which would yield a potential 100% extension up to that 389 level. That one seems less likely at this point in time. There's a lot of things going on out there with the confusion about the upcoming election, and is this vacancy within the Supreme Court going to add more confusion, more uncertainty to the election? Is it going to serve to clarify it? As I mentioned in the intro, normally when you have a seat available during an election year, the election tends to swing Republican. That's just the way it's been. Is it going to be helpful for President Trump's re-election campaign? All that remains to be seen. But the closer we get to the election, you got all of the write-in ballots. You can certainly envision that whoever wins is going to contest the election. Seems like it's going to take a while before we actually know who will be elected president. All that uncertainty doesn't seem positive for the market, but the market does tend to climb that wall of worry at times as well. So we have our two patterns, whichever way the market wants to go. Contingencies. That's how you become successful trading in the market, is if one pattern becomes disqualified, you know where the other pattern is. Just thought I'd show you a quick chart of the US dollar. Really not doing a whole lot, just hanging in there. Didn't seem to be affected by that Fed announcement either. Gold, we sent out a alert for our subscribers on this pattern. I mean, look at that. I don't even think I need to draw the triangle for you, do I? I mean, you can see clearly that symmetrical triangle. Fantastic pattern, one of the best patterns in the market right now for our proprietary type strangles that we do for our subscribers. So we have one on gold and silver as well. Here's GLD. That's the futures contract that I just showed you. Here's GLD, and you can clearly see the pattern set up again with the big triangle. You could go anywhere along through here really and draw the bottom of the triangle to set it up. Just again, not difficult to see that pattern set up. And we'll finish off as we usually do with the VIX. We had that big spike to the upside, but we've trickled back down since then. So no real follow through, just one big day of a breakout from that descending triangle that we had in the VIX and headed a bit lower to the downside from here. But you would think that heading into the election, at least it's my opinion, that volatility is going to be here throughout the end of the year. That's a great place to be if you're an options trader. That's the one thing you want, volatility. The market's moving, and that's what we're going to have. Hope you've had a great weekend. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.